This is how I legally avoid taxes using an irrevocable trust. I drive all of the revenue into the trust. That way, I report $0 in income for my Social Security number. The trust owns all the assets, and capital gains and passive income are all deferred in perpetuity. Now, for active income, use an LLC with you as the 5% member and the trust as a 95% limited partner. That 95% gets K1 and becomes passive income, which is deferred in perpetuity. Now, here's how the accounting works. For the total passive income, let's say you have $100, you're going to deduct trust expenses, which is $45, and then you can put $45 into your vortex bank and you have $10 left over. That $10 is deferred. So when it goes on the balance sheet at the end of the year, you report $0 on the 1041. For my personal expenses, I have a demand note. I subtract the personal expenses and update the demand note, and that is not taxable.
Yeah, that's just flat out tax fraud. And they're using this idea that somehow trusts don't have to pay tax on the income that they're generating so long as they moved it back into corpus. Now, the IRS has already addressed this. There's a chief counsel opinion on it, and those guys really shouldn't be out there on the internet. In fact, they're probably committing crimes just by talking like that. They're advocating for things that are going to get a lot of people in a lot of hot water. And if you hear anything that says vortex, probably run.